Vincenzo'S Gold Crypto Investing, the September the 26th, I believe, 2025, noontime cryptocurrency and blockchain technology, gold, and bullion update as we continue our journey to become asset millionaires via education and information and steady 401k investing, real estate, cryptocurrencies, gold and silver bullion and mining stocks, cash on the side earning 3 to 5% minimum in short-term bonds or CDs for peace of mind, emergencies, more importantly, buying a new or accumulating into an existing asset. And that's why you're here. I am not a financial advisor. I'm just showing you what I am doing personally to become an asset millionaire, and that you can get some new education or information that you haven't looked at before. And one of the more important things of why you're on your journey to do this is to be debt-free. You don't want car payments. You don't want credit card payments. You don't want interest-free loans on couches or TVs or refrigerators or appliances, right? You don't want none of that nonsense, or else your paycheck comes in, your paycheck goes out. You need paycheck come in, pay for basic necessities, and save the majority of your paycheck, or some of it, via investing it or just having it in cash or bullion or whatever you're saving it in, right? That's the whole point of the game. Live below your means, delay gratification, and have so you can reap the rewards later. But if you look at the Bitcoin price, you can see I'm not expecting a whole lot to happen this weekend, as it was a very volatile last 2 weeks leading up into the Fed rate cut, and then this week the post-rate cut, and then job data, economy news came out, and then more talk from the Federal Reserve on sort of what their next move is. Will they lower rates next month, or will they hold them pat, right? And if we look at the daily time frame and the Bitcoin price has been one of the only assets trading down. Stocks were up, and gold and silver and commodities were soaring before and after the rate cut. But you can see right now where we're at in the pattern, the moving averages are starting to trend down slightly, ever so slightly here. You can see the 100-day moving down. You can see the 50-day, well, this guy don't know how to drive shit. You can see the 50-day moving average trending down. And then you can see the 200-day moving average is still trending out, but it's starting to run parallel. But you can see now, after this 3.5-year pattern support, this rising channel that we've been harping on for quite some time now, and you can see way back where it started, all the way back. If we zoom out even more, you can see it started way back at the end of 2022 going into 2023, started the rising channel, and we've been noticing a step down pattern. As you can see, the first major run up after the confirmation was an overshoot up there all the way up to $74,000. The second time, then you can see you hit lower support. The second time he ran up into it, noticeably lower, and barely got up to it, and just ran into it and got rejected, right? Then you have an undershoot and an attempted breakdown right at 79,000. Then this time on the rally, we never got anywhere close to the upper resistance. We stayed just along the lower support of this rising channel, showing a hidden secret and tea leaves of a market changing that wasn't obvious, but it was hidden based on lowering volume and lowering push into this major upper resistance, and not making it as high each time you rally back in to this rising channel. You got lower and lower, and this last time you barely made it into there and only came right along the bottom part of that and never really pushed into it. And you can see then you couldn't get up any higher, and then you started to come down. And we told you, if you break down out of this and confirm a breakdown, which what this is doing right here is attempting to do it. As you came down out of it at first, rallied back up along it, could not get back into it, and took a harsh rejection with a slight volume uptick and a big price move to the downside, is signaling potentially a confirmed rejection, signaling a confirmed rejection and a breakdown in a structural pattern change, which would be significant. And I can't repeat that more. That could be significant if this is what did change, because then you would have to take seriously, like we told you, if it breaks down out of there, at first you're going to come down to the 200-day at 106, then bounce around, then eventually come down to the 95,000 and change, horizontal left to right, in red, which is very, very, very critical, because if you break that, now you're going to confirm that you have big moves to the downside, and a $79,000 and eventually a $61,000 short to medium term target would have to be taken very seriously. And then if we broke the 95, we would have to start looking at potentially a $27,000 Bitcoin and a $51,000 Bitcoin, as those are major areas of underneath support and resistance, and those are areas that have to be taken seriously if this is a true structural change of the market on a pattern change, right? And that's something we're going to continue to harp on and continue to follow on a daily basis to see exactly what happens and how this is ultimately going to play out going into the wintertime season, as there's been a trend in the cryptocurrency market where you have a big pump in November, December, going into the new year, and then you top out in February, and then in the springtime you have a bear market, right? A quick one. Then into the summertime, going into the heart of summer, you have a bull market pump, and then you start to sell off in the late summer going into fall before you repeat the process. So we're going to pay attention to that to see if this sell-off accelerates going into the mid and late fall, and then if we don't get into November and December into the holiday and we start to pump again going into the new year. So that's something we're absolutely going to continue to follow, because it seems to be a pattern that we've had for several years that we've noticed, and we're going to continue to follow that for you. You can see the Ethereum price has broke down below the megaphone neckline support, which is now attempting to flip it into resistance. You can see we're below that 4104. We got below the 200-day, the 50-day moving average. We're sitting right on the 100-day like we told you we would. If you cannot hold this for any reason and you come up and you trade around this weekend and you slip it, you're going to come straight down to the 3482, right? And that should be no secret, because we've been telling you this ever since you've been coming up to this 4900 and in this what looked like a triple top consolidation, right? So if you come down to that, then you would be looking at the 200-day at 3406 or the 3482, which is your major support. But if you did slip that, this could happen, and you could come all the way down here for a massive swing from bullish to bearish in the short term after tagging a new all-time high and then having a correction as great as 38%. Would not be anything out of the ordinary. As you can see, if we look at the XRP, there was some news on some leveraged traders that got liquidated that I seen last night, but I probably won't be able to find it again, because that's just right here. Key factors: XRP has been significantly impacted by recent market volatility. That's right, recent market volatility, which was highlighted by Vincenzo'S Go Crypto Investing 2 weeks ago, contributing to nearly $1 billion in leveraged liquidation. I repeat, $1 billion in leveraged liquidations. That's why we don't encourage leverage trading. XRP has been significantly impacted in leverage liquidations. XRP dropped 7% to $2.76. The Bollinger Band showed a range from 186 to 354, highlighted months ago by Vincenzo'S Go Crypto Investing, and now is being talked about by the mainstream Japan plans to classify XRP and other digital currencies under the Financial Instrument and Exchange Act to boost regulatory clarity and strengthen investor participation, right? So the volatile moved to the downside as everybody was betting bullish after the rate cuts, and you can see what actually happened. You've had a peak to trough 14% move to the downside, which was forecasted by Vincenzo'S Go Crypto Investing. And now what we're looking at here, if we can't get back above the 100-day or the 50 and these moving averages that are starting to trend down, it'll knock you right down to the 200-day and this horizontal 255, which we've been talking about. And we've been highlighting ever since you topped out at this 366 that you would come retest this critical 307 short-term support. If you break down below that, it's going to bring into question, and more than likely a pattern hit at this 213 in red, which is the 50-day moving average in the weekly time frame. And this would bring a new pattern that we've been talking about, where you could be seeing a mountain double top here, right? Where you had the first one, the slight new high, and then you're forming the bottom part of the neckline down there, but the original neckline at the 213, and that would bring a targeted move from top, slight new high, but the double top, This whole neckline that we had during this bear market, top to bottom, point of a breakout brings you all the way down here, just below what used to be our $1.26, which would be now our $1.20, right? And that would be a technical target if this does break the 213 neckline, right? Mountain double top. So that is something on the downside that we're watching in the short to medium term, and you should. And I can't stress this enough. You should be paying attention to this and absolutely be having this in your game plan as a target to the downside by November that could take place. And that's what we're going to continue to watch in the XRP. If you want to avert that, you have to get back on top of these two short-term moving averages and eventually on top of the 307 to not have this critical thing take place and try to take out the 366 high. The same thing for XLM. You're threatening to break down, like your moving averages are moving bearish, extremely bearish in the short term. You can see they've traded down. The price is sitting for dear life on the 36 cents. It's wicked below it a couple of times, just above the 200-day moving average. But if you can't hold this support where you're at now, you're going to quickly trade down to the 200-day moving average at 34 cents. And before you know it, you're going to end up down at the bottom part of the screen, support resistance trading box, down there at this 31 cents, something that we were talking about, and gave you that first mover inside advantage back here, knowing that we already had a hit there back in late July and early August, knowing if we hit it again, it would likely have to have a full body candle several day hit, and then if it came back into it, it would breach it, and we think it will, and we think it's going to end up at this 31 cents. I'm running into the grocery store here on a beautiful, golden, sunny, seasonably warm, early fall, approaching mid-fall in the great state of Michigan. Peace, love, the rock eyebrow, Jay.